Hello, this is Yoshida. Today, I would like to first explain the consolidated financial results for the first quarter of fiscal year ending March 2025. Consolidated net sales for the first quarter of the fiscal year ending March 2025 was up 21.6% year-on-year and up 1.9% quarter-on-quarter to total 355.454 billion yen. Operating income increased 3 times year-on-year and down 1.6% quarter-on-quarter to total 20.025 billion yen. Profit for the period attributable to the owners of the parent increased by 3.4 times year-on-year and decreased by 24% quarter-on-quarter to total 13.936 billion yen. Net sales and operating income hit a first quarter record high. We estimate that foreign currency exchange rates have a quarter-on-quarter impact of plus 11.5 billion yen on a year-on-year basis, impact of plus 33.6 billion yen in net sales. Quarter-on-quarter impact was plus 2.6 billion yen, and year-on-year impact was plus 6.8 billion yen in operating income. Please, next slide, please. This is the quarterly trend in net sales, operating income, and operating margin. The operating margin for the first quarter was 5.6%. This is up 3.3 percentage point year-on-year and down 0.2 percentage points quarter-on-quarter. Please go to the next slide. This shows a difference between the forecast as of May and actual results for net sales and operating income by business segment for the first quarter. Net sales of PT exceeded the forecast due to the recovery of the data center market from the bottom and the robust sales for aircraft applications. MLS sales exceeded expectations due to motors, mainly HDD motors and motors for automotive applications, but sales of electronic devices fell short of the forecast. SC sales was above expectations, mainly in optical devices and mechanical components. AS was above expectations in automotive devices. Operating income for PT exceeded the forecast mainly due to an improvement in production volume of ball bearings. MLS exceeded the forecast thanks to mix improvement. SC exceeded the forecast partly due to the effect of increased sales. AS was generally in line with the forecast. Please go to the next slide. This slide shows the quarterly trends of the Precision Technologies segment. On the left is a graph indicating yearly net sales trends, and on the right is a graph with a bar chart showing yearly operating income trends along with the line chart for operating margins. First quarter net sales increased 7.8% quarter-on-quarter to total 62.7 billion yen. Sales of ball bearings increased 8.1% quarter-on-quarter to total 42.4 billion yen. The monthly external shipment volume was up 6.1% quarter-on-quarter for an average of 223 million units. This was due to recovery in the fan motors mainly used in the data centers. Sales of rod ends and fasteners totaling 14.4 billion yen were up 3.8% over the previous quarter. Sales of PMC increased 17.2% quarter-on-quarter to total 5.8 billion yen. Operating income for the quarter totaled 13 billion yen, and the operating margin was 20.8%. On a quarter-on-quarter basis, operating income increased 18.4%, and the operating margin rose 1.9 percentage points. Please go to the next slide. This slide shows the quarterly trends for motor, lighting, and sensing segment. Net sales increased 2.2% quarter-on-quarter to total 99.1 billion yen. Looking at the results by product, we see that sales of motors increased 2.6% quarter-on-quarter to reach 77.1 billion yen. This is mainly due to the strong sales of motors for HDDs and solid sales of motors for automotive applications. Sales of electronic devices were up 3.9% from the previous quarter to a total 11.4 billion yen. Sales of sensing devices were down 0.7% from the previous quarter to total 9.1 billion yen. Operating income came to 5.1 billion yen and operating margin was 5.2%. On a quarter-on-quarter basis, operating income increased 42.1% and operating margin rose 1.5 percentage points. Please go to the next slide. This slide shows the quarterly trends for the Semiconductors and Electronics segment. Net sales increased 1.6% quarter-on-quarter to total 111.2 billion yen. This was mainly due to the incorporation of Minebea Power Semiconductor Devices, formerly Hitachi Power Semiconductor Devices, which became a consolidated subsidiary as of May 2, 2024. Operating income totaled 4.7 billion yen, while the operating margin was 4.3%. Operating income decreased 50.4%, and the operating margin fell 4.4 percentage points quarter-on-quarter. Please go to the next slide.
This slide shows the quarterly trends for Access Solutions segment. Net sales decreased 1.8% quarter-on-quarter to total 81.5 billion yen. This was mainly due to stagnant sales in Chinese market despite the increase in sales in automotive devices. Operating income came to 3.0 billion yen and the operating margin was 3.7%. Operating income increased 31.6% and the operating margin rose 1.0 percentage points quarter-on-quarter. Moving on to the next slide. The bar graph here shows the trends in profit attributable to owners of the parent, while the line graph chart changes in the profit for the period per share. The profit for the period was 13.9 billion yen. Earnings per share was 34.5 yen. Moving on to the next slide. Next, we have the quarterly inventory trend. At the end of the first quarter, inventory totaled 359.6 billion yen, which is 64.7 billion yen more than what it was 3 months ago. This was mainly due to the strategic build-up of inventories needed to meet the expected increase in sales in the second quarter onward, as well as foreign currency effects. Moving on to the next slide. This graph contains a bar chart showing trends in net interest-bearing debt, which is a total interest-bearing debt minus cash and cash equivalents, and a line chart indicating free cash flows. At the end of the first quarter, net interest-bearing debt totaling 251.2 billion yen was up 42.6 billion yen from what it was at the end of the previous fiscal year. Although operating cash flow is expected to increase at the end of the fiscal year ending March 31st, 2025, the company expects to make expenditures mainly in M&A related expenses for Minebea Power Semiconductor Devices and other companies. Moving on to the next slide. We made upward revision to the full year forecast for the fiscal year ending March 31st, 2025. We now target net sales of 1,560 billion yen and operating income of 103 billion yen. The full year forecast factor in only the amount by which the first quarter results exceeded the forecast in terms of both sales and income. The details by segment are shown on page 14. Regarding the net sales, we revised upward in each business segment. For operating income, the PT and MLS segments have been revised upward. The AS segment remains unchanged and the SE segment has been revised downward. The exchange rate is assumed to be 140 yen to the US dollar. Moving on to the next slide. This slide shows the forecast by business segment. Moving on to the next slide. This chart shows the difference between the revised forecast at this time and the forecast as of May. This is all for my presentation.